Hello, today is January 6th, 2024. As always, we'll start with our disclaimer. We'll go over our calls, we'll make some predictions, and we also have a change in our long-term view. Well, this is my trading plan for Monday, which is January 8th, 2024. Please remember, my calls can be wrong, my calls can change. Any trade you make should be made at your own risk. Well, this was the action on Friday. I didn't make a call because we had an economic report coming out, and it's always somewhat gratifying when I don't make a call and we close essentially unchanged. It doesn't make any money, but it doesn't lose any money either. This is the pattern with the early high. It tends to be a down day, close near the lows, and when that doesn't happen, it should lead to higher prices. Again, Monday's open can substitute for Friday's close, but here we're dropping all day. We closed over all these lows, this low, and even this low. It's actually bullish stuff if that's maintained. Gapping down Monday is entirely possible because that's a wall into the close, but usually a wall is panic buying or panic selling. I can't see panic buying like this if we're dropping all day long. So unless we take this out early, we should trade higher even if we don't close higher. Monday's pattern is the one with the early high. Now what we said was a friend of mine had a system for calling market turns based on price and time. He had a direct hit. We're still within his range, and I'm going to show you some more of his stuff later on that indicates this could be a low. My expectation was this decline wasn't over. I thought we'd see much lower lows before it ends. I'm going to have to change that because we have a candidate for the end of the decline at Friday's low. During the day, we got an ultimate sell signal in the morning, and that target printed immediately. MEJT said the drop was false. We had an optional higher target that we'd overtake this line. That was overtaken. That's resistance. This drop is again called false. Gives us a target 47.14.24. If we don't gap down smartly, that's my call. We also had this rally here. MEJT said that was false, so we trade under this line, and that would be support. So we traded under that line. That's played out, and support's held. Now, if you remember futures were down sharply after an unfavorable response to the economic report on Friday, and that was all recovered by the open. That's actually a positive signal. You can remember what happened when the 2016 election was called for President Trump. The futures were limited down, and by the time we opened the next trading day, all that loss had been erased. It really traps all the people who sold, and then it's a hallmark of a false move. But what happened here was we had this strong rally. All that rally was erased, even going under this, and then this low was erased too. This is a perfect opportunity, especially late on a Friday, for bears to show their stuff. We were unable to hold on to this rally, unable to hold on to this low, unable to hold on to this low. We hit a new low. Not much trading time is left. This isn't the time when retail customers start buying with abandon. When you rally like this and can't hold on to any of these lows when there's a lower target from the overnight low in futures, it's either short covering, in which case we'll have a gap Monday and undercut this fast, or it means that all the selling has dried up. And that's something I think we're going to know before we open. Now these were the dates we talked about based on Christopher Carolan's work for possible changes in trend, but he has a 3-day window in either direction, so Friday is still one of his dates. It's within 3 days of this change in trend date, so according to that it could be a low. Now this isn't the way people normally think of squaring of time and price, but here's 112 trading days from this high. Within 1 point, here's 112 points down from this high. This friend of mine has convinced me that squaring of time and price doesn't have to originate from the same high. If you can have squaring of time and price from two different highs, and that meets right here if this holds. We also have RSI, which if this is as strong a bull move as I think it is, and it's a bull market, it really should stay over 50, and we're at 55.07. We shouldn't really go too much lower than that. And that doesn't mean it has to hit 50. It means that's support. I mean, you don't have to hit it and then turn up. We should stay over that, which means there shouldn't be much more on the downside. Well, I've been unable to count this decline as complete, but that's no longer true. I mean, you can count this as an A, a B, and a C, and the fibs are there. That's 61.8. Now, I don't know if this is the only way to count this, and if we are going to have a correction here of size, you really want to see 5 waves up, and maybe there's a way to count it. Maybe there's some other way to count this as 5 waves up. I won't say it's impossible. But I don't think you can count this as wave 5. I can see the 1, the 2, I'm calling 3 here, supported by the Fibonacci ratio, but how do you count this as a 5? Let's take a look at this on a different time frame. I mean, that's an overlapping wave. And all these fibs work. I mean, there's your A, there's your B, these fibs are perfect, and there's your ABC with wave valence right there at the low. I mean, these waves work. So, what if this is the end of wave 4 right here? Wave 5, if it rallies, if it starts here, should have some kind of Fibonacci ratio to the previous waves. Well, my target for a long time has been 5,087. That's right here. And if this is wave 1 through 3, and that's the end of 4, wave 5 would hit it pretty much on the nose. I mean, stranger things have happened. And just because the waves balance here doesn't mean it's the only place they balance, but if this low holds, it's a reasonable plan. As I say, I take my stuff a day at a time. I can change it, but this is a strong candidate for a low right here. Well, Monday's pattern has really high regardless of where we open. There's a higher target. If we don't gap down smartly, the rules say it prints by early Tuesday. I've been looking for substantially higher and substantially lower targets to print this year, and there were numerous signs of a top at year end, and the weakness we've seen during a in a seasonally bullish period supported the view that lower prices would come first. That was my plan. However, Friday's low came at a price and time compatible with that weakness being over for now. The VIX has given a Bollinger Band reversal bias signal, and the NASDAQ McClellan oscillator should do the same thing if we close higher Monday. Friday's action, if maintained at Monday's open, is a rejection of the break to new relative lows, and gapping and promptly undercutting Friday's low is possible since we had a wall into the close. But absent that, my indicators are pointing higher, perhaps a lot higher. These are the patterns for next week. A lot depends on this analysis, on this low holding. If I'm wrong, at least that's a reasonable stop, but otherwise we have a target 47.1424. And don't forget my rule, the first 1 to 2 days of the new year tend to go contrary to the rest of the week. I mean, if we hit that, we might even take this out. This is bullish stuff. If we gap up, particularly, it's very bullish stuff because we had a big chance to break lower and that didn't work. It's a pattern with the early high, and that's today's call.